And when we talk about all of the different discussions that people are having here, obviously it's the election, obviously it's what's going on with the global economy. But how much is it the divergence between the situation right now in Europe versus the situation in the United States?
Well, it's been a very busy day, but I'd say that the topics are not very different from what they were a year ago. So we're still talking about how do we get growth to accelerate. And yes, Europe is growing less, but actually on a relative basis, Europe should do better next year than this year. In the U.S., we're seeing a slowdown. So it's about world growth. How do we get growth going again in an economy that we're very happy that it's still growing and that it's a soft landing, it seems, but we need to get growth to be faster.
How much are people talking about the necessity of scale, of size, of scope at a time when we're talking about UniCredit possibly taking over Commerce Bank, and we're talking about the fact that the behemoths in the U.S. are getting bigger? Is that something that's expected to continue?
No, absolutely. And, Santander is one of the biggest banks in the world by number of customers, which is what matters. We have 168 million customers across Europe and the Americas. So we have the scale. We have the global scale. We have the in-market scale. And that is a unique combination. That's what matters. We have investments in technology that are in the billions. We are rolling out global platforms. We said today that we'll have a fully digital bank by the end of 25 in the United States. We launched it a few weeks ago. So, yes, scale matters.
Scale matters, but I'm curious, because Santander hasn't made a big acquisition in years, what you're thinking about in terms of large-scale M&A in the current environment in the near term.
We haven't made a major acquisition because we don't need it. We are growing profitably. As of June, we were growing our top line at 10%. We have grown 60 million customers in the last 10 years. But very important, we're growing profitably. And we're rolling out our global platforms now in retail and consumer with our own tech stack. And so we're able to compete, with our current size. And we're going to continue to invest in technology and in people and different skills and making sure we are there where our customers want us to be. We just launched in Germany with Apple and Amazon, our digital merchant, Xenia. So we feel we have what it takes to be competitive in today's world.
And in the U.S., Santander is pushing really hard to grow through its corporate and investment banking unit, as well as the launch of Open Bank. I'm curious to hear what you think your competitive advantage is as you look to compete against the existing big investment banks and retail giants here in the U.S.
We're mostly retail, commercial, consumer bank. So we are at scale auto lender in the United States. We're number 5 here nationwide. We're the number 1 auto lender in Europe and LATAM. So we have the scale. We've proven that for many years. We have a retail bank that we have said a year ago we're going to make digital through the global platform, and that's what we've done a few weeks ago. So we are bringing our global scale to benefit our regional banks so we can accelerate deposit taking in the United States. And this is really unique.
Santander has a reputation of providing consumer loans, like you say. Mm-hmm. And right now, there's such a big question about what the consumer health really is, how able people are going to be to pay things back at a time where a lot of policymakers are saying we're reaching it. This is the soft landing nirvana. And a lot of consumers are saying we just don't feel it. How do you see the performance of these loans? Are you seeing signs of the sentiment that's more negative seeping into those loan performances?
So we're not seeing an increase in non-performing loans beyond the seasonal, trends. There's always seasonal trends in the consumer. And so, if you asked me this question a year ago, beginning of this year, we're actually better than we thought it would be. So nothing out of the ordinary, absolutely in line with what we expected, even marginally better than we expected.
So if there's nothing really wrong with consumer credit, the economy is not going wild, but it's not terrible. Is it really just the concern about the election in the U.S. that's kind of holding people back from being overly ebullient or coming up with big plans?
So, yes, inflation is hitting a lot of the consumers across the United States, has been hitting. It's cumulative, right? So it's been going on. Even though it's coming down, it's better. But yes, we feel that both and talking about the U.S. now, so we feel there is pent-up consumer demand. So we think there will be a pickup, for example, in car purchases. We get the feeling consumers are holding back a bit, and businesses too. I believe that you could see a pickup in investment after the election.
Anna, I want to ask you about private credit as well, because a lot of banks are partnering with investment firms to set up private credit partnerships. I'm thinking about Citigroup and Apollo, for instance. What is Santander's thinking about these kinds of tie-ups and the opportunities that they may present. Are you doing anything similar or thinking about it?
No, absolutely. We've been a leader in the originate to distribute model because banks are no longer the best holders of many of these loans because we have increased capital requirements. We have the distribution, as I said, 168 million customers, 4 million corporates across the world. So we are originating a lot of loans that we are then placing with the private equities. We work with all the major firms, and we believe that is something which is, good for our shareholders, and we believe, this is something we'll continue.
Anna, before we let you go, I do want to say, looking forward, what do you think is going to be the most important development in this next year for the banking sector? We talk about regulation. People don't want to talk about regulation. They're like, that's boring. But we talk about the geopolitical sphere, and that could be something. Or is it the path of interest rates and just how much they actually can go down in the divergence between the U.S. and Europe?
So the big question is, the structural trends that are inflationary. Right. So if you think about demographics, you think about defense spending, you think about climate transition, those are all inflationary trends. So the big question is, what is the terminal or neutral interest rate that is going to, let's say, be more consistent going forward? Probably the U.S. has a higher one than in Europe. 4% versus 3%. The question is, can the economy continue to grow with that level of rates? And the answer, it seems, yes. What we've seen in the last couple of years with relatively high rates, companies have continued to invest and the economies have continued to grow, maybe not as much as we'd like. So, for a bank like ours, interest rates in Europe of 2.5%, high employment levels. That's why, our non-performing loans are doing well. We're growing. We have a very large amount of very small accounts. And so as long as interest rates are 2.5, we're going to do pretty well on our margins, and we're going to do pretty well on provisions. So it's not a bad place for banks.